Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. Welcome back to the show, John.
Jim, it's a pleasure to be back.
John, one of our Discovery Watch companies called Highway 50 Gold Corp published results for its Golden Brew Carlin-type project in Nevada. Do we have a discovery?
Jim, unfortunately, we do not have a discovery. The Golden Brew project has been a difficult project. The Highway 50 guys picked it up in 2010 because there was work done in the range front, sort of west of the Quito mine, which is the farthest southwest Carlin-type deposit known in northern Nevada. And they had speculated that based on this jasperoid, which was modestly gold-bearing and had been looked at by various groups in the past, that when you moved into the basin to the west, where of course everything drops down deeper, this was part of a much bigger system. When they first took this project on, nobody really knew what was in the gravels, and they surmised that there would be a horse block which would bring this lower plate rocks closer to surface. This is what I call a Nevada 2.0 story. Basically, it's blind in terms of outcrop. It's the new wave for finding something really big in northern Nevada, Carlin type by a junior, because the Barrick Newmont JV has all the really good stuff all tied up, and anything else that might be good's also tied up. So the potential to make a huge Carlin type discovery literally lies undercover. And these guys did some drilling and confirmed that yes, the lower plate rocks, they are reasonably close to surface, not as close as one would wish, but they are there. And in late 2013, they optioned it to Regulus Resources, which was a company with which John Leask and Gordon Leask were previously involved. And Regulus said, yeah, we like this. So we're mainly focused on our anti-Cory copper-gold advanced project in Peru, but this looks like an easy shot at maybe making a big discovery. So they did this deal to earn 50% for $5 million exploration. But then they hit the wall because, unfortunately, this project area where they wanted to drill sits within the Forest Service jurisdiction. And the Forest Service, even though there's nothing resembling a tree anywhere on that property, it feels its mission is to restrict or limit exploration drilling for minerals. And the situation was further compounded because there was a lek in the vicinity, which is a sort of special area where the sage grouse mate. And of course, it's an endangered species. So anywhere where there's a lek within the vicinity, all these restrictions emerge about what you can do in that proximity. And this resulted in almost like 3 years of delay trying to get a drill permit, and the Regulus declared force majeure, and they ended up getting a 3-year extension on the deal, so that they now have until 2022 to get the job done. They got a program done in 2017, and it sort of showed some more smoke, and that there's potentially something here. But this program this year was really important. It was started in early April. It was supposed to be done in June. It ended up just being about 2,200 meters of 760-meter holes of RC holes, 3 holes, and they finally, in mid-August, reported the results, and it was a pretty lame news release. Regulus, of course, as the party paying for this $500,000 program, it devoted one short paragraph, and of the 3 holes, one of them intersected 23 meters where gold spiked up to 163 ppb, which it's encouraging, but it certainly doesn't constitute a discovery. But it's the sort of body language of way the news release was presented. There were no diagrams, no maps, no description. It's sort of the complete opposite of Nevada Exploration Inc. and its South Grass Valley project, where they think they have discovered a very large lower plate Carlin-type mineralized system, and for them it's only a matter of time to vector in on where the ore grade actually piled up. And so they provide endless detail about what they are finding. Of course, they're their gold grade maybe here and there spikes above 50 ppb, but they also haven't got that ore grade intersection. But the way this was handled, I would be very surprised if Regulus Resources decides to spend more money. Highway 50's disclosures are fairly weak in defining the timeline for spending, so we do not know how long Regulus has to make a decision as to whether to fund the next stage of requirements. I suspect that Highway 50 will get this project back. The bedrock was hit between 461 meters to 577 meters, so it is not shallow. It means it's going to be expensive drilling into this. They will have to fund this on their own if they get it back. That's unlikely. There are about $200,000 negative working capital. John and Gordon Leask are owed about $500,000. Their main focus is the Munroe project, which is in southeastern British Columbia. This has been a passion for these guys for decades. They believe they have a Sullivan II type system in their sites. They've done several rounds of drilling. The frustrating thing is they think they now have it pretty much figured out where it's either there or it isn't. They think they can do a make or break drill program, but the location it's under Munroe Lake. And the problem is you're going to have to drill some sort of angled hole, and there are always these deviation risks, and these are like 1,000-meter deep holes, plus deep holes. So if you get, they're expensive. You have to use core, and so now they're in this pickle. They kind of hoped that they would get some joy on the Golden Brew project from the Regulus drilling that would light a bit of a fire under the stock, so that they could fund this deal. It's actually Highway 50 is earning 50% from John and Gordon Leask, who are the key shareholders of Highway 50. That may be a tough slog, raising fresh money for this. I had hoped that the work PJX was doing next door on the Munroe project might come up with joy on that side of the boundary that would help light a fire for Highway 50, but that has not really happened yet. So I would say Golden Brew is probably dead in the water for now, and Highway 50 is going to have to pin its hopes on its other discovery play, which we are watching through Discovery Watch, and that's the Munroe Sullivan-type lead, zinc, silver story in southeastern British Columbia.
We'll have more with John Kaiser right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're speaking with John Kaiser. John, PJX Resources announced results for its second deep hole this year on its Vine zinc-lead target, and the market yawned. Have they finally killed the target?
Jim, sometimes that is exactly what I wish had happened. These holes are very expensive. I had very high hopes in the beginning of this year when John Keating first introduced me to his theory that the Vine property has a magnetotelluric anomaly, suggesting a very large, massive sulfide body at a depth of 800 meters and striking about 2,200 meters. He had come up with this idea that this is not your usual SEDEX Sullivan-type deposit, zinc, lead, silver mineralization, which is created by a smoker system on a seabed and tends to be laterally extensive. In the case of Sullivan, it actually was a very long-lived smoker system, so it built up quite a thick thick pile of massive sulfides, but a Broken Hill type deposit, and of course the grand eddy that generated this name is the Broken Hill deposit, discovered late in the 19th century, and that became the foundation for BHP. It is a former large SEDEX lead-zinc silver system that has been folded through regional compression, and the flatline mineralization has all been folded in upon itself, and the pressures have remobilized it so that the zinc ends up in its own horizon, and the silver and the lead in its own horizon, with the silver usually reporting to that. And it is the squishing of this flat body into a thick body that, even though it's underground, has to be underground mine. It's very high grade and is quite mineable because of the thickness. This is sort of the dream target. BHP eventually found another one called Cannington, which I think has now reached over 100 million tons. And so John Keating was hoping that we have this big MT anomaly, which is also associated with a gravity anomaly, which measures the density, which is what you would expect if you have massive sulfides all balled up into a big deposit. This has been the story for this year. They drilled one hole earlier this year, and it did not really hit anything except more of this vein-type mineralization. The Vine deposit is famous for its vein-style, high-grade lead-zinc-silver mineralization. It's been the focus of activity for decades. It's relatively shallow, but it's cross-cutting mineralization. It doesn't generate a huge amount of tonnage. And John Keating has argued that, well, this is probably remobilization from a much bigger system. Now, this hole that they reported, they didn't lose it. They actually drilled it to target depth over 1,800 meters. They stopped it when they hit this Moyi fault. The Moyi fault is a post-mineral fault that sort of strikes northeast, southwest. It's a huge fault that has nothing to do with the deposition or the formation of the deposit. But in this case, John Keating argued that the movement from this fault could have produced those contortion-type pressures that enabled this an original SEDEX deposit to get bunched up and become a Broken Hill type of target. Now, this drill program is not a complete bust, because at about 777 meters, just above where they expect the deposit to start based on the MT anomaly, they encountered a 5-meter interval within which there were 4 narrow massive sulfide horizons. Now, when they say massive sulfide, the massiveness comes mainly from the pyrrhotite, which is a worthless iron sulfide, but one of them, 1.4 meters, actually had roughly a 0.5% each of copper, zinc, and lead percent mineralization. That's not sufficient to create a mineable deposit. And it also had, interestingly, cobalt and nickel values, plus 7 gram per ton silver. But most importantly, according to their initial assessment, this is bedding. This is conformable to the stratigraphy, whereas everything else they've always encountered is stratigraphy cross-cutting vein material, which is, wow, we don't know where this came from. Now they are thinking, well, we are on the edges of a system, and maybe this is not a Broken Hill system, because clearly the zinc and the lead, they were still all sharing the same space, so probably has not undergone the sort of metamorphism that causes them to remobilize into their own horizons, and it seems to dip to the west. And so now in the context of the geology provided by these 2 expensive deep holes drilled so far, they're doing another downhole geophysical probe to see if, in fact, it is off to the side, and that this target, where they now think it projects, is still alive. We will have to wait a few weeks or so to find out what this downhole geophysical probe tells us. Meanwhile, the company's shifting its focus to the gold shear, which is part of the Eddy property, which is just to the west of the Vine, also in southeast British Columbia. And here they are going to start drilling the David zone, which was something sort of outlined pre-43-101 and in the mid-90s, sort of a smallish 96,000 ton deposit that ran 13 grams gold uncut. It has a depth of about 100 meters, 150 meter strike, and about a 2.3 meter thickness. So it's not a large body, but it's within a 1,600 meter shear zone that's only been tested to a depth of 150 meters, and they've done their own geophysics that suggests that the whole system plunges considerably deeper. So they're going in there to test this target, drill it deeper than the 100 and 150 meters that's been tested in the past. And because we're dealing with high grade, in this market, even though we've seen gold breach $1,500, it has not yet caused this general enthusiasm for the junior sector that we would hope. There's still a desire to see high-grade intersections. In this case, it would be high-grade gold intersections within quartz veins. But the context is such that if they start hitting this stuff at depth, this could become the new flagship focus and hopefully help them raise the money needed to go back into the vine and take another crack at this MT anomaly, which now is a lot more interesting than it was earlier, because we've finally seen evidence that there is a bedded massive sulfide system present in the vicinity of this MT anomaly.
We'll have more with John Kaiser right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Welcome back. We're speaking with John Kaiser. John, nickel prices have rallied this year. Is this helping FPX Nickel and its very low-grade billion-ton Dakar project?
It is definitely starting to help FPX Nickel. Now, the Dakar project was discovered in 2010, and we have it in Discovery Watch because it is a very unusual deposit of the kind that has never been commercially developed. It's over 1 billion tons of 0.12% nickel. And that's not the olivine-based nickel that is in almost any ultramafic rock. This is the nickel that's associated with a mineral called awaruite, which is a combination of nickel and iron, basically a natural stainless steel. And when Peter Bradshaw and the team of FPX tackled this in 2009, 2010, they were concerned that the world might be full of these previously unrecognized deposits, and these can be mined by by gravity and magnetic separation only. And so the idea was, if there's no sulfides in there, you don't have all these acid drainage problems. You have a very simple system. And Cliffs bought into this notion and actually delivered a PEA. But the PEA suggested that they need $8 plus to make this work. And then Cliffs itself became the focus of an angry hedge fund that took over, kicked out management, and dumped all the project. FPX bought it back for about $5 million. And the management has been funding it basically with through its own pockets, doing financings that have no warrants, often at a premium to the market. And they just announced a financing of $1.25 million at 15 cents, which was above the market. And insiders intend to participate. Peter Bradshaw has put an enormous amount of his personal money into this. And the impetus right now is coming from the fact that nickel, which has been stuck in that sort of $5.50 range, in the past month has rallied over $7 a pound. And the question is, why is nickel doing this? Because the LME warehouse inventories are still relatively high. and the electric vehicle demand for nickel sulfate has not exactly taken off. And of course we have this problem that nickel pig iron, which has been the reason nickel ended up collapsing in the past decade. This never shows up in the warehouses. It goes directly from the ground to China and is dumped into the blast furnaces, this low-grade laterite ore from the Philippines and Indonesia, and then they make their sort of low-grade version of stainless steel from this nickel pig iron. Well, in 2014, Indonesia got annoyed that all this ore was being shipped abroad as raw ore, put a moratorium on exporting the nickel laterite ore, and said, you guys have to build these facilities and make nickel pig iron here in Indonesia. And this, in fact, started to happen. Chinese entities started making the big capex, but then, of course, they're dragging the Indonesians realized, well, our output has really collapsed, so we'll allow you guys who are building this to export some low-grade laterite to your facilities in China while you are building this. And they said, but this is only good until 2022. Then the ban is on again, and there's no more exporting of raw, low-grade ore. And of course, while all this was going on, the Philippines ramped up their production, and that helped suppress the nickel price. It's questionable to what extent the Filipinos can continue to mine at the rate that they're going. But what caused the nickel price to rally in the last while was rumors that, which have I think now been largely confirmed, that Indonesia, concerned that everybody was dragging their heels with building the domestic facilities for making nickel pig iron, they said, okay, we're going to move that date to 2020, which is next year. And that, if they actually do that, that would cause a shortage in nickel, because right now, these bigger plants are still being developed, and they'll eventually supply plenty of nickel from Indonesia. But this sort of depressed price, all of a sudden this window is potentially over. And this is good news for FPX nickel, because there are longer-term imbalances in the supply of nickel coming, and they've been working on both the recoverability and payability of their nickel product and the marketability of it. One of the innovations that they've looked at recently is to not just crush and use gravity and magnetic separation to pull out this 0.12% Davis tube recoverable nickel, but they also looked at flotation, and that's kind of counterintuitive because flotation is associated with sulfides, but there is a way of introducing another sulfate which allows the nickel to end up in a separate concentrate from the magnetite. And previously the concentrate that they were producing was only going to be 13% nickel and with a whole bunch of magnetite in there. But with flotation, they're actually able to produce a 60 to 65% nickel concentrate, with the rest primarily iron. And most of the magnetite shows up as a separate concentrate, and they're also looking at figuring out if this is marketability rather than just more stuff for the tailings pile. So while we've been waiting for nickel to get out of the doghouse, they've been very busy working on their flow sheets, and they've also now that they have a product that's 60-65%, they can present it to a lot more audiences. They think they can get 90-95% payability rather than the 80% or so that Cliffs assumed in its PEA. And they've also done some refining with the flotation flow sheet, where they realized that, well, the original tests were done on dried material, but when you use wet material, which would be your run-of-mine material, they were able to get a boost of 5% in the recoverability of it. So they are now trying to figure out between 90 micron grind size and 360 micron grind size, so what will be the optimum. I talked to Martin Turin the other day, and I said, okay, so you've done all this work. You've got a $7, plus nickel price. When are you guys going to do an updated PEA that includes the higher grade zone from the Baptiste deposit, which you outlined after Cliffs bailed on you? And he said, well, we've had 1 month of nickel above $7. We would like to see that this is for real, that the $7 is the new base for it. And so that means probably, waiting until the end of the year. And if we still see the strong nickel price, it would take us maybe 4 months from starting the PEA. We've got much of it already done, but to actually formally complete it. So it's possible that if all goes well with the nickel market, we will, in the second quarter of next year, get an updated PEA and see if they still need $8 plus nickel, or if a lower price will do, and see if we can have this new type of deposit and a Warroite low-grade deposit become a new source of nickel for the market, and we'll see where it goes from there.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howestreet.com. Discovery Watch is a production of How Street Media Incorporated.